guys, welcome in this new video. I hope that all of you are doing great. So in this video, we will talk about how to improve your trading, but more specifically, how to properly calculate your risk as a trader on each trade that you take. So this will be a very important topic because a lot of retail traders don't really understand how to do this the right way. So just before that we start, as always guys, please leave a like under the video. I would really appreciate it, and also make sure that you are subscribed to the channel. So how to calculate your risk as a trader? That is one of the most important topics that we need to talk about, because well, most people who lose money in trading is because they don't know how to calculate the risk and they don't know everything that is related to this topic. So let's say that you take a trade and you have a risk to reward ratio of 1 to 2. Okay, so you risk $100 and you can make $200. So on paper this looks good, right? So you can make more money than what you risk. So if you take these trades on a daily basis, well, eventually you will make money, right? So that is the very basic way of looking at it. Now, what I want to talk about in this video is, a little more advanced way of doing it, which is that you need to use this principle of risk to reward ratio, but adjust it to the probabilities, okay? So let's say that you take, a trade of, we can even go with bigger numbers, okay? So let's say that you take a trade with 1 to 5 risk to reward ratio, okay? So you risk $100, you can make $500. That's pretty good, right? On paper, it looks amazing. Now, if we look at probabilities, and if you have a 20% win rate with this strategy, or even less than this, maybe 10% probabilities of winning this trade, is it still a good trade? Well, no, it's not, because now we are looking at it from a risk-adjusted perspective along with probabilities. And so that is very important to do. So whenever that you look at a certain trade setup with a certain risk to reward ratio, you always need to know what is the probability of this trade to work, and then you will see if it's a good trade or not. And so now the question is, how can we find out this probability, right? How can we know what is the probability of this trade working? Well, this is where backtesting comes in, and this is where collecting data about your trading. That is something that I always try to explain you guys and to really put the emphasis on, but you need to have data about your trading. You need to know your win rate, you need to know your average risk reward ratio, you need to know your maximum drawdown, yet you need to have so many different data about your trading, and that's very, very important for you guys to be able to calculate these things properly and then have good results over the long term. So once you have a trading system that you decided that you're going to use, you need to test the system, you need to trade with it for a certain time to get this data, and then you need to use the data to optimize the results. And that is how you optimize the results, okay? When you take a trade, not only you look at the risk to reward ratio, but you also adjust it to probabilities, and there you will see if it's actually a good trade. Because just like I said, even if you have a 1 to 2 or 1 to 3 risk reward ratio, it looks good on paper. But if you then look at probabilities, you might see that it's not such a good trade anymore. And another problem as well that we can talk about is if you are a very short-term trader, okay? So if you go for moves, of 10, 15, 20 pips and things like that, well, what we also need to take in consideration is the fee that you will pay to the broker to trade, right? So when you trade, you have, multiple different expenses that actually go to your broker. So you use leverage, right? So you borrow money, you need to pay interest on this money, then you need to pay the spread, you need to pay the commissions and things like that. So if you trade very small moves and you take many trades per day, well, at the end of the year, this amount of money that you pay to the broker will add up and it will cost quite a lot, okay? So when you calculate the risk to reward ratio, and if the opportunity is good enough, if you are a short-term trader, you also need to take this in consideration. So a 1 to 2 risk to reward ratio or a 1 to 3, where at the beginning it looks very good, if you adjust this to the probabilities and then also adjust this to the fees that you need to pay, then you will realize that it might not be such a good setup. And this could be the exact reason why your account is not growing and why you are not making a lot of money. It's because you are just looking at it from a two-dimensional standpoint. In reality, it's a lot more complex than this, and there's a lot of things, just like I explained, that you need to take a look at. So when you look at a certain trade, ask yourself, and I should even say just look at your data, because once again, you need data to trade properly. So look at the data, right? You know, what is the risk-reward ratio? What is the probability of me getting this trade? And then you also include the fees, and you see if everything looks good. So after that, when you have taken a look at all these things, and then you look at the probabilities and what money you can lose versus what money you can make, if it makes sense, if it looks good, well, all you need to do is take these kind of trade setups, and over the long term you will be profitable, right? There's no secret, there's nothing fancy here. It's very just doing the math and trading according to these numbers, right? That's really the basic of it, and that to me is the best way of how most traders can improve their trading, because I guarantee you that a lot of you guys are not doing this, or you're not doing this properly, or not doing this at the extent that I explained. Okay, and if you change this in your trading, you will see that over the time, as you collect this data, well, your results will just improve more and more, because you know exactly what you're looking for, you know exactly what will be the drawdown, what will be the profits and things like that. So you have a much more stable kind of environment to work with, and overall this will just make you a better trader. So I hope you guys enjoyed this short video. If you did, you can leave a like under it and also share it around. I think a lot of people could benefit from hearing this. So on that, take care, trade with care, manage money well, and I will see you in my next video. Bye bye.